That's been around since 1982. That was when like $1 million is actually worth something and you could buy something with it. I actually looked this up and I might tweak this number a little bit, but I noticed that back in 1982, the amount of accredited investors based on the $1 million number was about 1.87. So 1.87% of the population was accredited. Today, that's closer to 10. I think depending on the statistic you read, it's anywhere from 7 to 8% that are accredited. And so it's super outdated. After some thought, I decided that I was going to be in the camp that they were going to increase it to match the 1982 number adjusted for inflation. So welcome back to episode 43 of the Real Estate Syndicator Live, the last live of 2022. And I didn't want to be the party pooper and be the only one not doing predictions. So I figured, well, better topic for our last RESL is to do a 2023 prediction focused obviously on syndications, SEC. I'll do a couple of macro predictions. I'm going to do 5 predictions, my top 5 predictions, though I think I'll probably sneak in a couple more as we go through these. So without further ado, here we go. Prediction number 1 is I do believe that in 2023, the SEC will get around to updating our accredited investor rules. As you guys know, accredited investor definition has been $1 million in net worth or 200 grand in income last couple of years with a reasonable expectation of earning that this year. But that's been around since 1982. And that was when like $1 million is actually, worth something and you could buy something with it. I actually looked this up and I might tweak this number a little bit, but I noticed that back in 1982, the amount of accredited investors based on the $1 million number was about 1.87. So 1.87% of the population was accredited. Today, that's closer to 10. I think depending on the statistic you read, it's anywhere from 7 to 8% that are accredited. And so it's super outdated, and they've been talking about updating that number. And now originally the big deal, there's a headline that I still have on my LinkedIn. I think they've taken it down or they changed the headline, but the headline basically said that there was rumors that the SEC was going to increase it to 10 million for accredited investors. So taking it from $1 million net worth to 10. That was a little bit of a misquote on the article itself, but it did start the debate. And after some thought, I decided that I was going to be in the camp that they were going to increase it to match the 1982 number adjusted for inflation. So if you just take $1 million from 1982, you use the official CPI, government statistics of inflation, you get to about 2.8 or 2.9 million. And so I think that's the number they're going to pick. They're going to pick $3 million. And I think that in conjunction with the new rules that will come out or already come out, but the new rules that will actually allow you to become an accredited investor through a test, through a licensing process. I think that's going to be sort of the balancing. So all of you who are currently over $1 million but less than 3, that doesn't mean you're SOL. It just means you don't automatically qualify. What's going to allow you guys, what you guys are going to have to do if you want to continue making these investments, if this comes true, is you would have to go get certified by one of these SEC licensed portals, take an exam or whatever, become sort of an accredited investor via the licensing. So I think that's what's going to happen. That's what some of the SEC commissioners have even said, or the staff has mentioned that, hey, we haven't really rolled out the certification program because we want to balance it with this new thing. So anyway, Alan, of course, nicely sneaks in there with the income. I've been trying to think a little bit about the income. And I'm not going to commit to income. I think you have to update it, but you can't like if you triple the income, you're at 600 grand, right? And that puts you in like the less than top 1%, right? I mean, I think the top 1%, depending again on statistics, put in about 450, 420, 450, depending on where you read, puts you in the top 1%. So jacking it up to 600 or 900 if you're married, I mean, that puts you like in such a high category. I can't imagine it's going to go that high. But I haven't really sat down and, put too much effort into trying to figure out what the number is. To me, the accredited investor was so simple. But one of the things I'm planning on doing here in the next couple of weeks, and I'll probably release it on social media or something, is actually to go back and reverse engineer, figuring out, like I said, we know how many accredited investors were back in 182. So we know that $1 million equaled 1.87. I think we'd be interested to find out what the numbers were on the income side to get to back to that 1.87 number. Because like I said, right now we're at this 7.2 or 8.8. I've seen a couple of different statistics, but I do think that's coming. And honestly, I thought it was going to be coming up earlier this year. That actually talked about having it on the agenda this in 2022, and they've just been stalling. But I can't imagine it's not going to happen in 2023. So anyway, that's my number 1 prediction. Prediction number 2 is that the finder rules that came out over a year ago now, I think it was October of 2021, I think that's done. I don't think that's going to be coming down the pipeline in 2023 or even 2024. I've kind of given up on it. I do think eventually it's going to happen, but it's not going to happen with the current SEC commissioner. And so for those of you who aren't super aware, I won't spend a ton of time on it, but there was this really exciting proposed rule that came out in October of 2021, which basically said, you know, right now you can't get paid to raise money. You can't get paid to send referrals. That's, you know, you need a broker dealer license. They were going to create an exemption to that called a finder rule or a finder's exemption, which was going to basically allow people to refer accredited investors to syndicators in exchange for a commission, right? And there were some restrictions involved. You know, they couldn't get too involved in the process. They were able to, you know, identify and screen and sort of contact investors, and they were able to show them the offering docs. And actually they can walk them through the offering docs, make introductions to the sponsors, participate on those things. They couldn't give any opinion of value or really act really like a broker dealer, but they were going to be able to do that. And in exchange for that, they were able to get a commission, you know, whatever you guys agree on in terms of getting these referral fees or commission. So that was super exciting because we have that gap right now. We've got the gap where, you know, the only way you really can get paid right now is to become a broker dealer. But the challenge is broker dealers don't like to get out of bed for less than $25–50 million. So there's this gap. And everybody's trying to get around. That's one of the issues that we have right now. Everybody's trying to get around these rules, and they're co-GPs, and they're trying to come up with all these, you know, funky ways of getting around the rules. So this was meant to really address that gap. And I think a lot of us were super excited about it. But unfortunately, I don't know if it is a political issue, but, you know, the proposed rule passed during the prior commissioner, Jay Clayton. His staff put that rule together. And then obviously since then, new administration, new SEC commissioner. And, you know, I haven't personally spoken to the SEC, but I've got some colleagues who have basically called them up and said, hey, what's going on? And they've kind of just said, you know, we'll get to it when we get to it. It's not on the table. It's not on their agenda at their next meetings. So I've officially pulled the plug on my enthusiasm for that proposed rule. I think it would have been an amazing opportunity for many syndicators, especially people who are in the ability to be able to go raise money or refer people and get a referral fee. But unfortunately, I think that is going to pass one day, but it's not going to happen in 2023 or 2024, maybe in 2025 if there is a change in administration. So anyway, so I think that's my prediction number 2, no finder rules in 2023. Somebody just asked me about that at the last live. As you guys know, my third prediction is around a little bit more on the crypto side. For those of you guys who are syndicating and sort of tokenizing your syndications, and there's people who are starting to tokenize real estate. I know it's not everybody's into that, but I truly believe that in the next 3 or 4 or 5 years, the majority of syndications will be tokenized. There'll be security tokens, which, you know, has a lot of benefits. I'm not getting into it right now. But one of my calls this year is that the majority of these cryptocurrencies out there are going to basically become illegal. The SEC takes the position that the vast majority, meaning 90, 95, maybe 99% of these these tokens out there, whatever you want to call these cryptocurrencies, are unregistered securities. Many people forget that the same definition that you and I use, hopefully use, when we're talking about real estate syndication. You know, if you've heard me talk about, you know, what is a security? Is this a security now? We always talk about this layman's definition that comes from the Howey test. But I just always say, anytime you're taking money from passive investors where the returns are being generated by your efforts, you're in the business of selling security. And that's how we analyze in the real estate syndication world, of whether something's a joint venture or security or what have you. And most syndications obviously are securities offerings, and then we comply with, we either register it or we find an exemption, right? 506B, 506C. That's the exact same rules, by the way, that apply to these tokens and what we call kind of loosely cryptocurrencies. And there's a specific case. The SEC has actually decided to go after one particular company, which is one of the largest companies, called Ripple. Not going to get into the details of that, but basically the SEC is contending that Ripple is a security because it basically raised a bunch of money back in 2014 and actually continued. And basically the returns are being generated by the efforts of the centralized Ripple. And by the way, Ripple is a legit company. They are in the business of facilitating international money transfer. So almost like a what are these companies called? Like a DHL or something where I can, not DHL, sorry. What's the company where I can wire money right now or just send money internationally? It takes forever. The fees are really high. Ripple allows you to do that instantaneously through their system. So the business itself is legit. The challenge is the token, which is XRP. The SEC is taking the position that that is a security. And I think the ruling will come down this year or next year in 2023. And I think the SEC is going to win. And I think Ripple is going to be considered, or XRP, their token, is going to be considered a security, which then by definition will have, pun intended, a ripple effect on the rest of the industry, because 99% of all these other tokens out there are also going to be unregistered securities offering, and they're all going to be found illegal. The only cryptocurrency that currently is almost assured or guaranteed is not a security is Bitcoin. That's the only one that the SEC has come out and said it's a commodity. We're not going to regulate it like crypto. But even Ethereum and all these other major ones have a major risk of being considered an unregistered offering and illegal according to the SEC, which will make probably the vast majority of this cryptocurrencies go away, which is what a lot of people are predicting anyway. I don't think that's a huge prediction on my part. It's going to be very, very similar to the internet craze of 1999 and 2000, when you had, pet.com and anything that was anything related to the internet. Most of those went to zero. I don't know if anybody had any pet.com stocks, but that went from whatever it was, $1 billion valuation down to zero. And then there were a few that survived, right? The Googles, the Amazons, the Facebooks of the world, they obviously survived and thrived. And I think that's what you're going to see here. But I think that's going to come down in 2023. And I think the vast majority of these cryptos are going to be held as illegal. Since I'm on crypto, I'll throw my other brief prediction here that I do think crypto's got a lot of space to fall here. I think you're going to see a bottom at the beginning of 2023 in that $8,000 to $12,000 range. I think a lot of these crypto miners are going to be going bankrupt. You've already seen them go bankrupt because of the price. The price of Bitcoin has gone down, and the price of the electricity that it takes to mine these things has gone up. So I'm predicting a lot of bankruptcies on the miner side in 2023. And I think the price will bottom out somewhere in that $8,000 to $12,000 range. So if you're bullish long-term on Bitcoin, that'll be my, which I am, by the way, that's going to be my opportunity to dive in there. So anyway, that's my little crypto rant. And by the way, another prediction maybe in that realm is I predict we will continue to see, our office probably is getting 2 to 3, maybe 4 calls a month on syndicators who are interested in or are wanting to securitize and tokenize their syndications. And I think that's going to continue. I predict next year we'll probably double or triple that amount. And like I said, here's the next 5 years, I think the majority of syndications will actually become tokenized. So if that's something, if you plan to be syndicating here in the next 5 years, it's something you may want to just take a quick look at. We did a live episode on that, and I've done a couple of videos on that if you want to just kind of get the basics of how tokenizations work. Which, by the way, from a securities law standpoint, it's no different than anything else. It's still, you have to register, find an exemption, whether it's 506B, 506C, all of that stuff is the same. It's just literally a digital representation of your LLC membership units. Number 4, I couldn't do a prediction show without giving my 2 cents on interest rates, since that obviously affects, on the macro side, affects real estate investors, especially in the commercial real estate. I did a show the other day with Ken McElroy and our CPA, Eric Freeman, and I'm going to go against the grain here a little bit. If you guys saw that show with Kenny, I think interest rates will be lower next year, not because the Fed wants them to be lower, but I think the market's going to force them down. I do believe that if you look at the bond market, if you look at the inverted yield curves, you'll see that the market is predicting a downturn in 2023, which I guess is another prediction right there. But I do believe that interest rates, the 10-year interest rate, and therefore the mortgage rates, which are sort of tied to the 10-year, will be lower this time next year. How much lower? I don't know. I don't think it's gonna be crazy, but I think you're not going to see maintained interest rates, which is, I guess, is good news for real estate investors. If you've been following any of the stuff, you should know that real estate, or I can just tell you from experience, commercial real estate is generally about 20% down from their peak. And I think it was like May or June that the peak is. So if you're out there, I don't know how many of you guys are actively looking at deals right now, but you should pretty generically seeing a 20% discount on prices, not sales, but prices from June of 2020. And I think that will continue for a little bit, but you should get a little bit of a reprieve from that if my prediction is right, that interest rates, mortgage rates should be a little bit lower than what they are now. I'm not saying they're going to be going back to where they were earlier this year, but what are they now? They're hovering around, in the mid 6s to 7s. My guess is they'll be in the 5s or high 5s is going to be my prediction for 2023. And sort of correlated to that, which will be my 5th prediction and last prediction. Then I want to hear you guys' predictions or any questions about the predictions or just any questions about anything. But I do believe that we will have significantly lower inflation than we are today. We call that disinflation because obviously I'm not expecting inflation to go negative, which would be flat out deflation. But I do think we're coming up on a slowdown. if you follow history at all and you look at interest rate, if you plot all these interest rates from, the 70s or even back in the, I like to go back to the 1940s, you'll actually see that inflation doesn't go up in a straight line or down in a straight line. It's not like, hey, we went up to, I think, 9.1% this year. It's not like we went all the way up to 9.1 and now we're going to come down and get to wherever we're going to land. You're going to get 9.1 one year. The next year, you'll be up by 5. The next year, you'll be up by 8. The next year, you'll be up by 13. The next year, you'll be down to 2. I think in the 1940s, you went negative at some point, negative 2%, but then the next year it's 8%. I mean, it's going to be sort of this up and down thing. But I think in 2023, you'll see a lower inflation rate. I'm guessing sub 5, nowhere near 2, but probably in that 4, high 4s would be my prediction on inflation. I think that's going to be one of the reasons that you'll see obviously interest rates come down, and I think you'll see a lot of asset prices coming down in 2023. So anyway, those are kind of my thoughts in general. I do think because of the interest rate and the inflation, I'll probably concur with my good buddy Kenny on, I think real estate prices will continue to go down in 2023, which is obviously a great opportunity for us syndicators. Curious to see from you guys that are actually raising capital, whether you think it'll be harder or easier. Let's do a poll right now. Those of you who are actually raising capital, how many think that, or if you just want to put in the chat, whether you think it'll be easier or harder to raise capital in 2023? This has always been a fascinating question for me. Drew says harder. Thank you. I've always been fascinated with this question because obviously as syndicators, as operators who are out there buying, we are excited when prices go down. I mean, if prices go down 50%, great. These are all buying opportunities. They're all on sale. The syndicator gets pumped. But usually, the LPs get a little bit tighter. You're probably going to be in some kind of a recession. It's going to be a lot harder for somebody to write that $100,000 check, even though you're excited about it. Maybe in the long run, they're going to regret not writing the $100,000 check. But when the stock market's down, when the unemployment's up, when you're in a recession, I always feel that it's going to be a little harder, or as Anita puts it, more challenging to do. So it looks like it's unanimous here. Harder, more challenging. So yeah, I think you're going to see that as well. You're going to see lower prices and harder to raise capital. But anyway, I don't know if you guys have any specific questions. Ketan, easier if you do your due diligence and build a strong team because investor wants to invest. Yeah, I mean, a lot of syndicator clients are really focusing on, sort of not stabilizing, just increasing that relationship with your list and your investors. You really want to step that up a little bit and communicate a little bit more with them and really find out what they want. We had wasn't on the live, but I've had Jay Scott, actually both Jay Scott and Ashley Wilson on the podcast, and they did a retreat for my partner Bethany. It was a great retreat, and one of the things they were talking about was they're polling their investors a lot more, and what they found out is that their investors are now looking much more concerned about security of their principal more than these crazy 15-20% IRRs or whatever. And so they've actually not flipped their model, but they changed their investment opportunities where they're really focusing more on steady, solid, conservative funds as opposed to trying to 2.5 or 3x your money in the next 5 years, because I think investors are a little bit more concerned about that. Jeff harder, but it will thin the marketplace, and we will see what syndicators are swimming without pants on. That I agree with. And in fact, I think that's one of the other reasons why you're going to see some of these prices come down, is because, a lot of those interest rates, I mean, not the interest rates, a lot of those loans are in fact bridge loans, as you guys know, and those are usually 3-year loans, 3 + 1 + 1. And those are going to be coming up due here in 2023, 2024. And, no matter how good your value add was, if that cap rate goes up, significantly, even 1 point, then all that work from your value add, all that increase in value kind of evaporates. So I think you're going to see some of the more inexperienced syndicators, first-time syndicators that may have gotten in right at the peak, maybe aren't as experienced as many of you to running those. I think they're going to run into some hot water. So I think there's going to be a ton of opportunity in 2023. I'm very curious to see if the LPs concur with that. It sounds like you guys think that it's going to be much more challenging to do that. But I am interested to see who's going to stick around. Johannes, cash is king. Even Ray Dalio changed his position on cash. And Ashley does rock. I agree. Doug asks, will the bridge lenders extend and pretend waiting for lower rates? Very curious. Yeah, I don't know if anybody else has a thought on that. That's a great question. I think that, I don't know, they definitely don't like to take over their properties, but I'll be interested to see what happens when these loans expire. Remember, these are not, agency loans at this point. They're just bridge loans. So they're going to be interested. I think you're going to see a lot of these bridge lenders also, as you're already seeing, a lot of these mortgage lenders go out of business as well, along with the crypto miners. Alan, you had your hand up, I think. Yep, Alan, you are. Hey, how you doing, Alan? Unmute yourself.
Yeah, we're doing good. Yeah, about harder or easier. I think for people that are excited about real estate and understand real estate, if you exaggerate it, the best thing you could do is buy an apartment building when the interest rates are at 15%, because rates are coming down from there. So it's just a matter of how high are they going to go. I think the next 6 months is the best time to buy real estate, and then get passive investors in, and then refinance it as they come down and give the investors back their money. And then you have infinite returns. And I think it's a no-brainer right now, but that's just me.
No, I love that. I appreciate that. And that's my exact thinking. I'm actually we're in the market for a personal residence, which is not necessarily the best time to buy. But if we find the specific area that we want, everything, that's my thinking too, is I can just sort of, I'll eat the 7% interest rate, but then, be able to refinance. The one challenge is, if you remember going back to Eric Stewart's live, I forget what episode it was. As interest rates go up, obviously your debt service coverage ratio starts to get squeezed a little bit, and so the amount of money that the lenders are loaning you will probably, if it really was, I know that was an extreme thought experiment, but if you're at 15% interest rates, I wonder how much the banks are actually going to be lending you. It might just be 30 or 40%, but I understand your concept.
Yeah, it's a financial engine. It's got to run. So the bank's not going to lend you money. I mean, when the rates go high, the prices have to come down.
Right.
Yeah.
So the question is, how do you, and that's probably, some people have talked about this already, but how do you communicate that with your investors? And I think you communicate with your investors now. Like, I think everyone should be communicating with the investors, letting them know you think this is going to be happening. Interest rates, prices are going to be coming down, and that's not a time to panic. It's not a time to get tight. It's time to open up your pocketbooks and invest, because those are the best times to invest. And we can always refinance and get your cash out and all that fun stuff. So no, that's a great point, Alan. Thank you. Kenneth. Lenders do not want the property, 100%. Heavy negotiations on loan mods. That's your prediction. That's a great prediction. Heavy negotiations on loan mods will take place. Did that in 2008. It took 5 months of negotiations, but got a 40-year amnesty. And I remember those times well. I was just in the thick of things in 2008. And a lot of my buddies actually ended up working in the loan mod industry, since that was such a booming industry. Usman, are there any references to SEC regulations on their website which would highlight that passive investors have a right to look at all the financials? Sounds like you've got an issue here, Usman. This would be that would be great, I assume, to share it with the LPs who are new to syndications and have some reservations in investing. I don't think there's anything in the SEC because I wouldn't expect it, Usman. I hope I'm pronouncing that correctly. Where you're going to find that is in two places. One is your operating agreement. For the syndication, there should be a section in there about books and records and what they can request. I know ours basically says something to the effect of, here are the documents that you can request upon reasonable notice, obviously, with your expense. I mean, sometimes people want you to just kind of, do a photocopy of all the docs and overnight them to you tomorrow. And obviously there's a cost involved, but whether you spend the time to copy records and mail them and build them for them, or maybe you just make them available in your office, although these days not too many people have offices, but that's going to be in the operating agreement. And if it's not in the operating agreement, the other place you'll find it, in fact, my documents are mirrored from the Nevada statute. So every LLC, because most of us are using LLCs, every single state has their own LLC statutes that very rarely do people look at it, but they'll have a section on there of what the investor is allowed to review. And I took mine out literally from Nevada, since we're doing a lot of business in Nevada. And that's usually, your P&Ls, your tax returns. Obviously, you want to be redacting those so you're not sharing sensitive information. But those are the two places you're going to find it. So take a look. I just recently looked at Texas LLC. Texas has a pretty robust LLC statute, and they talk about what an investor is entitled to. And that really is helpful, not just on the books and records, by the way, Usman, or everyone, but anytime there's an issue that's not addressed in your operating agreement, a great place to start is the LLC statute, because that'll usually say, if it's not, basically in layman's terms, if it's not in your operating agreement, then this is what the rule is going to be, right? Similar to, I was just talking about somebody with, not that this is a a wills and trust episode or anything like that. But same thing, if you don't have a will, your state statute will determine how your money gets distributed, right? Then most of them will say, well, first they're going to go to your parents and your grandparents or whatever that order, it's going to be in the state statute if you don't have something already written down. So similar with the LLCs, if you don't have it written down in your operating agreement, check the state LLC statute, because that's where you'll reference that language. And then of course your PPM will have, well, your PPM may or may not have that disclosure because it's going to be so prominently in the operating agreement. Is it? I think it's Kenton, 302 Kenton. I'm going to assume it's Kenton. GPs need to be transparent on the deal 100%. So that's why, that's why we like to have that language in there that literally tells them what they can and cannot request. I mean, it's got to be reasonable, but it's basically everything they want to know. It's P&Ls, it's tax returns, it's all that stuff. Jeff put a link to something in there for LPs checkout, whatever that. Jeff, what is that? Is that what website is that? If you want to unmute yourself.
Yep. You got me?
Yeah, I got you. What is this
Yeah.
ILPA.org?
It's called the International Limited Partners Association. It's not a government body, but it's a national body that basically makes suggestions for people that are creating PPMs and doing private placements. And it pulls a lot of weight. So if you want to, they've got suggestions for sponsors and GPs and people that put together funds on what limited partners like to look at. So it's a good resource to kind of go out there. They have like a Q&A as well of what are like some of the most common questions. So when you're going and pitching to limited partners to investors, it's kind of good to have answers to a lot of these questions, because they're going to probably, they're a good organization to be able to tout to your limited partners and investors to say, we kind of follow their guidelines, and they kind of look out for the limited partners. But go out to the website, check it out. A lot of the big funds, they kind of talk about, there's a whole due diligence that you have to go through. And once you go through it with these guys, it's all good.
That's awesome. I think that's super helpful. I'll check it out too, but to have sort of an independent, well, how independent, but anyway, a third party website, and then you can then show them your documents to say, hey, this is what these guys are recommending, and here's my stuff. And by the way, you should always suggest that to your securities attorney too. I mean, we securities attorneys kind of have our templates we've worked on our documents we've worked on for 20, 25 years. But if there's something, so we have a way of sort of starting the process, but if you have something you want to add or change or give more information than we give or less information, always communicate that with your SEC attorney, because we're usually more than happy to add that to the PPM or add that to the operating agreement if it's something that is important to you specifically. So thanks, Jeff. Really appreciate that. Curious as to the group, let's do a quick survey too. Interest rates. When I say interest rates, mortgage rates for commercial real estate, higher or lower this time next year? Let's see if we can get like a little chat thing here and see just kind of a quick here. Jeff says higher, a lot lower. Doug, see, love this. Complete opposites. Lower. Jeff, you're starting to become the minority here. Lower. Everybody's thinking, I thought I was going to be like the one. And you think, Jeff, so let's put you on the spot here, Jeff. Do you think that's because the Fed will continue to raise the interest rates, or do you think that's less of a connection between the Fed funds and the 10-year and the mortgages?
I kind of go with Ken on this, as far as I know they're going to raise rates. They may not be as big. They're not going to be doing these 3/4 and halves. They might be doing quarters, but I'm also being pretty conservative and cautious as well. So I'm not going to assume that they're going to go down. So if they do go down, that's great. That's like a free throw, but none of my business plans. And when I talk to investors, my plan's not going to be dependent upon it going down. I'm going to be telling my investors that if it goes up.
I love that. So sort of not hope for the best, but basically prepare for the worst. But if it goes better, that's great. Exactly. Yeah, I mean, who was it I was listening to today? It almost seems like everyone is in the camp. That's always concerning, right? When everybody's in the same camp, you're like, man, maybe we should look at the other side. But it seems like everybody's in the camp, or at least the people I follow, which may not be everybody, but that they all say, look, something's going to break between now and the end of next year, and that's going to cause the Fed to sort of pivot and have to go down. But it seems like everybody's thinking that now. So it's like, well, if everybody's thinking that, it's always a concern there. But anyway, so that's interesting. I think most people here are saying high 4s to 5. So Kenton's saying it's flat. Johanna says, as an operator, we have to win in every as an operator, we have to win in every environment, correct? Up, down, and flat. We got to win for our investors. 100%. Yeah, I'm just curious. What about inflation? Same question. Inflation from December to December. Do you think I actually, for Ken, I think I asked him whether the over-under was going to be 5. So do you think it'll be over 5? If it's inflation from December 2022 to December 2023, is inflation above 5 or below 5? Drew says lower. I mean, I think most people think it's lower, but at 5. Yeah, and again, I'm just extrapolating. I don't know I don't know anything more than anybody else does, but if I'm going to go with anyone, I think I'm going to go with the bond market and the curves, and that's clearly stating that they're expecting bad things to happen next year, which is gonna lower prices and inflation. Doug says under LA port traffic down 23%. Yeah, by the way, I usually can see especially at night, I can see all the ships from my house, so I can kind of see over to where LA Port is, and I definitely have seen a lot less traffic over the last 6 months. It was crazy during the pandemic. At night, you would just look out and you would just see it's like a Christmas lights of ships. And I'm a good hour drive south of the port, but you can just see all the ships coming all the way down to Newport Beach, down to South Orange County where I was. But yeah, I definitely see a lot less traffic as well. So that's a good stat, Doug. LA port traffic down 23%. Nicholas, if you calculate inflation the way it was calculated in the 1980s, we are at 15.3% inflation. Good point, my friend. Excellent point, actually. Kenton, most predictions will depend on what Congress does, especially the lame duck Congress. Yeah, I know they've got a new thing out there that I try to kind of stay with that. But anyway, cool. Well, I think I'm going to cut up here. Got some things going on here, and but before I go, I just wanted to again thank you guys from the bottom of my heart. It's been a lot of fun starting this community at the beginning of this year, and just had I have a blast doing these lives. I'm still shocked people show up and listen to it, but I'm going to continue doing these into 2023. I might change the format a little bit, but really looking forward to 2023. I hope everybody has an amazing new year, a happy new year, and have an amazing 2023. It'll be the best year yet. Without further ado, we'll see you next year. Next week, we'll see you again. Thanks, everyone. Appreciate you guys. Happy New Year.